Hey YouTube, this is Zach with the Gillies Financial, and today I'm going to be talking about JPMorgan Chase because they announced earnings last week, as well as Citigroup and Wells Fargo. Tomorrow, Monday, July 18th, we're going to be hearing from Bank of America as well. Now, one of the things that we saw from JPMorgan as soon as they announced earnings was a pretty strong drop, and even before hours, it was down 5 or 6%. And then we had a strong rally on Friday where the stock at some points in time were up as much as 5%, ending the day up 4.5%. So some of the concerns that came out from their earnings is the fact that they are expecting potential losses going forward, and due to the current regulatory environment, they're required to hold back additional cash in reserve should any of those loans have losses. Jamie Dimon did come out and they said that because of those rules, they feel like they are having to contract their liquidity, meaning they can't deploy as much cash into the market for loan growth to grow the portfolio due to those regulatory concerns. And because of that, they expect that that could bring on a larger recession because they can't deploy capital at that point in time, despite the fact that the company continues to maintain what Jamie Dimon has consistently called his fortress balance sheet. So the company continues to perform incredibly well. You can see, again, the company just incredible growth. They continue to grow more than $1 trillion in loans outstanding. Now, one of the things that we saw during the earnings call was the fact that they did see a drop in overall revenue from the trading side of the house. However, we saw an increase in the overall interest income, especially that net interest income, which is to be expected as interest rates continue to rise. And I would expect JP Morgan to continue to increase in terms of net interest income. One of the things that I am going to be watching going forward is going to be associated with, do we see additional losses from the institution? And what do we see them doing with their capital? One of the things that they came out and said is that they're going to do a pause on share buybacks, which is something that I have been wanting to accumulate additional shares of these stocks because of the share buybacks. You can see that as the price goes down, they're going to be able to purchase additional shares, and they're not going to be doing so at this point in time, which again is concerning. However, one of the things that I like about JP Morgan right now is if you look at them on a 5-year chart, they did hold the 2019, 2018 kind of this range of the 100 to 115 or so dollars at this point in time, which is why we're kind of sitting here at $113 per share. The benefit of being at this level is that JP Morgan has continued to do a good job of providing shareholder value, whether it's by dividends or by purchasing back their stock. At this point in time, I expect them to continue to issue the dividend. There was nothing that they said they would not. In fact, they issued a special dividend for their preferred stock shareholders. So at this point in time, I continue to expect that you're going to continue to see benefits there in terms of earning shareholder value. And a large percentage of that, even if the stock does not move, is going to be due to their $4 dividend, which is coming north of 3.5% right now. The company continues to be very well collateralized, very well capitalized, and should they incur any additional losses, I expect them to perform comfortably during a recessionary environment. And this is one of the reasons why I really like investing in some of the larger banks. I think JP Morgan, Bank of America are the stalwarts. Citigroup continues to have additional or potential upside, and I personally just don't like Wells Fargo. There's just too many things that have happened over the years behind the scenes. So that being said, where could JP Morgan go from here? Well, depending on what analyst you're watching, some think that the market could be at a bottom, but we've seen about 15 bottoms so far this calendar year. And this is one of those things where what companies are A, profitable, and B, do I think are going to be here 10 years from now? And JP Morgan continues to outperform in a number of manners and areas, and for that reason, I think that they're going to continue to be here and continue to be profitable. Because of those reasons, I think that they're continuously a strong buy, but that's just my opinion, and I'm by no means a financial advisor. I'm just some guy on YouTube. So we'll be watching going forward because I think that Jamie Dimon and JP Morgan continue to provide a lot of solid economic outlook, and they are a stalwart, which means that depending on what we see from them could influence the broader market. So it's one thing that I'm going to be watching on a go-forward basis. At this point in time, if you're still here and you found this content helpful, please leave a like and subscribe. It helps the channel to grow and helps me to make new videos. Thanks for watching, and I'll talk to you later.